Good morning, guys, and welcome to the Camp Financial Stock Market Update. Today is May the 4th, and we're going to get this posted here before the market opens. Let's get started right off the bat with a question that I got regarding Carnival Cruise Lines. So, looking at their chart. Obviously, it's been pretty much an upward trajectory, pretty much bouncing in between. Gosh, probably. Let me take a look at the numbers here. You're probably looking at less than a 10%, probably around 8%. Up and down vertical, where it's just, if you chart all the highs and run a direct line from the highs, you chart the lows and run a line up through the lows, it's pretty much an 8% channel that has been running in. So that's been going on since really about middle of September. Looking at the technicals on it, if this would have been one. I did not play this in my trend system. I had most of my cash deployed at the time when this would have passed into the system. But what we're looking at is a stock that's, with the one system, we want it above its 200-day, or we want it above its 20-day, and we want the 50-day to cross above the 200. Nothing real special with that, but if you go back and test it, you'll see that typically it's a profitable setup, and with that, we always put in a 20% trailing stop, reinvest the dividends. So that's one way to trade. Like I said, if you test it, I've been running this system now for a few years, and it's been profitable for me. But anyways, so back to Carnival Cruise Line, where we were talking about. So the setup on this, it passed, and it looks like it would have been right at the end of October, right before the election. Looks it crossed the 20-day. The price was above the 20-day. Looks like October 30th. That would have been also the day that the 50 crossed the 200-day moving average, and the price on that, you're looking at around $47 a share. So that's where the system would have triggered, $47. You put the trailing stop in place and just let her go. Since that point in time, it's rallied from $47 to $62.64 is where it closed last night. So I have not done the percentage. I just started looking at this, so let me pull out my calculator and do a quick percent gain here. But if we do 62.64 from $47, it's $15.60 a share. On $47, it's a 33% gain in basically 6 months. Pretty much in line with a lot. There's a lot of other companies that have made runs like that. So obviously not all of them, and that's, I guess, right now what's going on. As I mentioned the other day, it's starting to become a stock picker's market. We're not just going to see the market go up across the board. You're going to see companies that are doing well, they're performing well, they're trending well. Any three of those different ways can make money in the market. We're probably going to continue to see them do well, and those that aren't are going to fall off. We're going to see them retrace, and my thought is probably you're going to see the S&P 500 pretty much hold flat for a while. I just don't really see it. I don't really see a big catalyst in our that hasn't already been priced into the market. Everybody talked about the Trump tax cuts and those sorts of things. That's already kind of baked into the market now. So with that, like I said, it becomes a stock picker's market until something else happens that says, yep, okay, it's going to go higher, or nope, it's time to look out below. The market's going to have a pullback. When is that going to happen? Who knows? So with that, like I said, CCL, I would have looked in the technical system. I would look to get in there. Looking at their dividend, I'm a little concerned based on their free cash flow. I mean, their free cash flow is right around $2. Their dividend's $1.60. So that's telling me they don't have a real big moat for the dividend. So the dividend could be susceptible. It really, for them, it's going to just depend on whether or not they can get their cash flow up. They don't have a lot of debt. And I'm looking at the rest of the fundamentals here real quick. Like I said, because I just pulled this one up to take a look at it. They are expecting a good earnings per share increase this year. So, if their earnings increase, obviously that's going to improve cash flow. That improves cash flow. That makes that dividend a little more stable. So they could potentially support higher prices. But at this point in time, with what has run up already, I would be hesitant to jump into it. So, all right, let's jump over, because I haven't looked at this. I know when I was invested, when I got invested in Marriott Vacations Worldwide, that's ticker symbol VAC. We bought that based on fundamentals, based on historic price to earnings, and just there's a lot of situations that kind of came together on that one that led us to be interested in buying that stock. I can't even see when the 50-day crossed the 200-day, because it's been at least sometime before mid-June or mid-July on this chart. I could pull another chart and take a look at it, but we don't need to. But again, so this stock has run up big time. Same kind of situation. If you look right at the end of October, beginning of November, it actually had dropped below its 200-day for just a minute. Crossed back above the 200-day in early November. It was about $65, $68 a share, something like that. And it is up to 114. So the stock has almost doubled since the end of October. I haven't made those kind of gains. Well, I mean, I have, but I got in this stock in April of 2016. It's $67 a share, so not too far. So we've had over a 70% increase once you include dividends in this. Now, as we start to tighten our stop on it and look at their current valuation, because we bought this based on just their valuation had dropped so low. They were so everything was so negative against them. Looks like their valuation, obviously, when you've recovered almost 100%, the valuation gets more back in line with what historically it had been. it may be time to take profits. I still like the company for sure. It's not, I'm not really concerned because it's just continued to rally up, but I don't want to give back all my gains. So that's why we're looking at maybe taking some of that off the table. So the other day I was real quick. I talked about some of the stocks that we had written about. So originally I'd written about Aflac back in November of 2015. And I mentioned selling a $60 put option at 55 cents a share. So basically, if the stock dropped below 60 bucks, you'd be obligated to buy 100 shares at $60. So it did. It was, I think, and we had sold the January 2015 or January 2016 put option. With that, we end up, our buy price ends up being $59.45, excluding commissions. Currently, with the dividends that we've taken in on it, and the current price, so we've gained 29.6%. Aflac's had a high of almost 77 bucks. It's currently trading just under 75. We're continuing to hold it. We've got a stop loss in, a trailing stop of 20%. So, it's a guaranteed winner. So we're going to hold on to it, let it continue to do its thing, collect those dividends, and go from there. Tower Financial, we wrote about that on August 1st of 2016. $23 buy price. We bought a limit on the open. It's one that's rallied up as high as $29.05. So it's had a total gain, including dividends, of 10%, basically 9.99%. Again, another one that's in a guaranteed win position for us, due to the stop loss pulling up and the high price that it has met. The last one, so we had written about Apple on February 7th of 2017. We posted, and I had mentioned, I'd be willing to buy up to $125.23 with the expectation I want to be able to get a 20% gain if I'm going to buy. So it never dropped to 125.23, and obviously it is now up basically right at the number that I expected it to get to by the end of the year. So it's high flying for sure. It's definitely performing quite well, and so if you're in Apple, good for you. You've done well, and like I said, the stock's performed quite well over the last 3 months since we've written that. The last one we wrote about in February 17th of 2017 is when we posted, and that is Google. Google, I felt like, again, another one that it was kind of right on that threshold of what we would accept as far as being able to get that 20% gain. I'm trying to find the 52-week high. There we go. I haven't updated that on the spreadsheet, but it's at a 52-week high of $950.20 now. So we were saying to buy 100 shares at $841.31. That's when we bought it on the open that day. Currently it's at $948.45, so it's up about 12.75%. It's had a high of $950.20 again. So our stop loss puts us in a position that, at worst, if the stock turns around and goes straight against us, we're going to get out with about a 9% loss. I don't see that happening. Again, I expect Google to be over $1,000 by the end of the year. So, all right. that runs through those. Let's do a real quick roundup since we're closing actually on 15 minutes. I don't want to go too much longer. Let's do a real quick market roundup. Take a look at what's coming out, earnings, and then we will go from there. So if I can get my computer to move a little quicker here, there we go. So today, well, last night we had Facebook, Kraft Heinz, AIG, MetLife. MetLife is one that we're in. We have shares in MetLife. Today you've got Activision Blizzard after earnings. You've got CBS after the market closes. Monster Beverage after the market closes. Consolidated Edison, trying to look for Regeneron Pharmaceuticals before the market opens today. Let's see if we got any other real big ones that I hear people talk about a lot. Maybe Occidental Petroleum, that's been in a downward trend heavily for the last 3 months. It's coming out before the market opens. So fair amount of decent sized companies again that we've got coming out with earnings today. Big ones still yet to come. We got Disney coming up later on. That'll be next week actually. So real quick, in the last week we did Mondays. So again, we still got Google well up. Telecom, you got AT&T's down 5%, Verizon down 2.5%. I mean, those are dividend plays really. I mean, that's what they are. You want to buy those to collect the dividend. Regeneron up 10% over the last week. Amazon 3.5%. Royal Caribbean up 7.6%. So we talked about Carnival Cruise, and Royal Caribbean hadn't moved quite as much as Carnival Cruise Line, since November, but now it's starting to catch up. PayPal did really well, up 10.5%. And let's take a look. We got a few that did poorly. Charter Communications, Discovery Communications, pretty much any entertainment. You got Disney down, Fox, CBS. Like I said, Telecom's down. And pretty much everything in the basic materials except for the two large major integrated players, ExxonMobil and Chevron. So pretty much all of your independent oil and gas are down. Oil and gas equipment and services down. Ag chemicals down. It's been a rough run in the last week over in the materials sector. So, alright guys, that is it. We'll leave it there. If you have any questions, send me an email, chrism@campfinancial.net. Send me a tweet on Twitter @cmelik, and you can find me on Facebook. You can look for Camp Financial, or you can just look for my personal page, Chris Mielik, and we can connect there as well. So that's it guys, take care, and we will see you next time.